Okay, we're going to now then continue with the program of the conference today. Let me invite to take the stage Elena Koneva. Elena, please, if you could just come onto the stage. Elena is Director of International at FICO, and she's going to be the moderator of the panel that we have entitled Making Open Banking and Open Finance Work. And maybe you would remember from Mario saying at the beginning of the session today that open finance, open banking, these are important themes going forward and very relevant for our industry. I'll hand over to you so that you can invite your fellow panelists to the stage. Thank you.
Thank you very much, Enrique. Let me invite our members of the panel. David Shellenberger is the Vice President of FICO for Score Product Management. Choose any. Luciano Scalise, Managing Director of Decision Analytics, EMEA, Asia Pacific, Experian. Davide Corda, Senior Director, Data Strategy Transformation, Intesa Sanpaolo. And Thibaut Levesque, Chief Revenue Officer, Unnax. So thank you everyone for being here, for granting some time to us for discussing this hot topic of open banking. I know that everyone thinks we are stopping you from the cocktails. It's not us, it's Enrique who put so many questions on the agenda, and right now we need to discuss all of them before we let all you people go. So we'll try to be as fast and furious as we can. I'm not going to spend too much words presenting who the people in the panel are, because just from the names of the company, you can understand that we have here a big lender, we have here a big, huge credit bureau, we have here a big fintech, right, Thibaut? Or you can
account information service provider.
Yeah, like the service provider, and we have here a big analytics provider. So like all pieces of the chain of the open banking are on the stage, and our objective is to kind of try to solve as many open banking problems that we've seen, or give you some solutions of what you observed and everything. So the first thing that we need to discuss today is PSD2 is valid in Europe for couple of years at least, or maybe like 3, 4, 5 years from the moment when we started discussing it and everything. So the question is what we have learned from it. What are the challenges that we've seen from implementing it? And probably we'll start with you, Luciano. As a bureau, like what you observed, what's your feeling about the PSD2?
Well, let's start with a positive note. In these 4+ years, we've been able to confirm the level of insight and agility that potentially we can derive from the open banking data. Now, the adoption rate has been orders of magnitude slower than we thought. So a lot of work that we undertook was to understand why. Why is the adoption rate so low? Because you cannot actually materialize all that insight and agility that was the holy grail of it. And what it turned out to be is that the consumer psychology works very different when you are opting in for most things and when you're opting in for something that is finance or bank statement related. So even when you are going to go for an open internal connection, you just accept most of the times everything. Yeah, I agree. Yeah, I allow cookies. Yeah, everything. Will you give me your soul? Yeah, go for it. So it's all good. Now, the moment you say, will you share your bank statement and your transactions? Everyone gets goosebumps at that moment. And what we found, then we took several surveys to understand what will make a difference. And where the needle started to move is related to information security and the feeling of security the consumer will get. So I think a big lesson learned is to make explicit all the ring fencing and security that goes around this data and how it is going to be used. Now, that is more on the psychological or behavioral economic side, and I'm not minimizing it. It's probably the largest chunk related to the adoption rate that, again, is the largest component as to what is the obstacle. Now, there are, and I'll go quick. I know we are the last obstacle between our friends and the drinks, so yeah. The other is on the technical side, and this we could probably divide in 3 main topics. The first one is the information still doesn't have enough standardization in terms of the format and how it is flowing. That makes things complex from a technical standpoint. The other one is that this is still patchy. So for certain elements of the ecosystem. You get a lot of data, and that's fantastic. And for other inquiries, you get very few data points. So it's still patchy, and again, not consistent in terms of the amount of data that you see flowing. And the third element is around the SLAs. When things go well, it's all fantastic. When you have an issue, there is still not a standardized SLA amongst banks. And that makes things very complex when it is not functioning. Of course, the data aggregators and the AISP licenses should help in this direction, but it still is a journey in terms of having a unified service level agreement for consumers. And I'll stop there.
Okay, Davide, what you've observed, what's the hardest part?
So so definitely I share the fact that as a matter of fact, the uptake has been very low. But analyzing the reasons why that uptake has been low from a banking perspective is very disappointing, because on the other side, there was a lot of investment into it. And reflecting on that, I think that the reason was the lack of flexibility into the scheme. I think was very prescriptive, and everybody was focused on trying to comply and be really in the boundaries of a regulation that doesn't help in innovation, doesn't help in creating really a digital economy and a digital marketplace that is what open banking is all about. So I think it's that's the main lesson learned. There was not really a win-win, a kind of framework where you can innovate, where you can collaborate, but was just a regulation. You need to comply exactly as many others. And banks are very rigid in applying regulation because they are associated to risk. So the last thing you want is to have a customer having a problem with your data sharing in that space. And that associated to the aspect of trust that I absolutely share, I think it's what makes the program not really successful. Of course, now the European regulation is looking at other aspects like SPA schemes and more collateral type of collaboration and contracts that could incentivize some aspects, including some aspects of compensation that are, of course, now introduced in the Data Act, and that could somehow help. But yeah, it's not easy. On top of my role, by the way, within Intesa Sanpaolo, I'm also part of the expert working group working for the European Commission, specifically on open banking. So we issued recently a report, and the European Commission is developing a first legislative proposal. So we are all waiting for it, and I have no disclosure about it. But just to say that some of these aspects we have brought into that discussion, trying to bring the lesson learned from PSD2, that is, in a way, something that has helped to learn and has helped to form some maturity in the market, but of course is a starting point. Hopefully will not repeat same level of issues.
Thibaut, what are your lessons from?
Very interesting feedback from Luciano. Basically, open finance service provider are in between Davide and Luciano to pass the data in a secured way. So what we learned about PSD2 in the last 3-4 years, good news, it's working. It's working on consumer side in terms of adoption and conversion. And I see also it's improved user experience in terms of making frictionless onboarding financial analysis. One shot or recurring in time. Good thing also for lenders, it have been the one which have been adopted that technology got really addicted to data. First, and we've seen a pattern, which was basically, oh, I just want few data to complete my scoring at the beginning. Then they say, oh, can you enrich that? Can you tag this better in terms of categorization? And then they get addicted to a point they need to want to not only implement it during the loan issuance, they want to monitor the customer in time to prevent potential risk appearing, like during COVID time, during the crisis we are getting in, to make sure the pattern remains the same, because someone getting a good scoring can change in time for change of behavior or change of affordability pattern. Or a person loses his job, so the consequences is ability to pay you back won't be the same. Then from that we and also for collection process, lenders also who using tokenized card to get paid back basically can monitor the balance of the account to avoid cow at the collection point. So those are the good things. I say it has been widely adopted in lenders which are pretty intense in terms of volumes of loans and really where the competition is very intense. And step by step, we are seeing like real estate getting into it for renting, for new services, standard loan is getting step by step more and more in place. So it's getting adopted from subprime customer to mid to prime customer in terms of adoption curve. The bad thing is in Europe, it's a European regulation, PSD2, and we have like, it's like we are living in two separate areas. There is Northern Europe and Southern Europe. And like the adoption rate, implementation rate is not the same everywhere. So it's difficult to scale as a business globally, and you have to deal with characteristics of each countries in terms of PSD2 implementation, in terms of data. The second thing is like the one who adopted it wants more and want not only bank data, they want open finance. And what we've seen in Mexico, where we are, like half of the population there has a bank account, so they need to complete their scoring extra data. So alternative scoring based on incomes from the tax government, from social security, from telcos, data from retail store, and to build this 360 view of a customer. And here I see that could be also needed. So I think in terms of regulation, all the players around the table we are representing today should talk way more to provide to lenders better data, to make better decisions, to be more profitable with lower risk. And if we were like, we can push this the regulator to, we should not wait for the regulator to regulate. We should organize as a market better, because all the stack is pursuing the same goal. We want to be profitable. We want our customer to be profitable in credit market. So let's try to talk more.
Okay,
I'll say.
Dave, maybe you want to add something from your US experience. I know PSD2 is not applicable there, but maybe some parallels.
Yeah, well, I mean, it's interesting, you know, when we're talking about the compliance aspects, for example, I was just in New York, and Rohit Chopra, who runs our CFPB, made the comments that the future is open banking, really. He is really speaking, I think, to the limitations of traditional credit scoring, you know, which we're a big player there. But speaking to the fact that when it comes to consumers that have no credit bureau information, that have very thin files, that it's going to be increasingly important to bring in open banking data. So the big question is, okay, well, what does that mean in big markets like the US, as well as internationally? Obviously, there are many of these issues that we're dealing with Europe and LATAM, Central America. What's interesting is his comments were that we're very much looking at what's happening in the EU and what's happened in the UK. That the US is very focused on just very mindful of the potential for surveillance and unwanted surveillance by consumers. So there's a lot of regulation, I think, that's going on there. But in his mind, really, the future is open banking. And so it's an interesting sort of melding, I think, of data at rest with traditional credit bureaus and the combination of streaming data that you would see through open banking, decentralized data sources that are brought together. And that's an exciting piece to me. I mean, in a way, it follows sort of a theme here of how public and private bureaus may be working together. Or kind of more openly, if you think of public bureaus, maybe public data sources. And there's a good example of of some of the work we're doing in Mexico, right? Of taking public income and employment type data and pulling that in, melding that with credit bureau information to create augmented scores, which is pretty interesting.
To be fully resilient.
Yeah.
Okay, I have an announcement for everyone. So we tried to make this session kind of interactive. I know it's raining, getting darker and everything, your eyes are closing. There's the poll in which you can participate. It has 3 questions. You can go through them, take your time, vote until the end of this session. And then at the end of the session, before the questions and the answers, we would be happy to hear your thoughts, see how you voted, because the questions were designed by our panelists. So it's not only you asking us questions, we also have some questions to the audience. It would be nice to interact. So we are moving on. What are the barriers that stop the developing of open banking, apart from the ones we named, the one that you see right now, which is just, something which is stuck? Davide, maybe you can comment.
I can start. For sure, one aspect, I think, is the cross-industry. I think the example Thibaut brought was already hinting that to really create value, you need to open up cross-industry. You need public sector data, you need telco data, you need energy data. That's the all-round data economy that will make the difference. If we keep focusing on the finance data, we'll keep focusing on the same stakeholders, same investment area, very regulated market with a lot of burden, but also a lot of sensitivity as well, because if you keep adding regulatory aspects on this market and on the other side, and that's the other point I want to bring, that is level playing field. We just need to make sure that open banking and digital economy are always based on a level playing field. There are situations where there are in the data economy players that are able to already get access to data in an unregulated way, potentially offer similar services, and bypassing all the regulation that is there, maybe getting customer consent, as Luciano was saying. So he didn't buy, but when is a bank asking you, you are, of course, much more careful, because bank's relationship with the customer is based on trust. And on the other side, other players in the digital economy have developed a different level of connection with their customers. So we all need to think about not open banking for me, but data sharing economy as a whole. And if we keep focusing on one direction, we are just bringing the burden and exploiting the value out of one industry that, by the way, is a European-based industry. So these are comments I'm bringing already to the Commission. So of course, it's not just a thing I'm keeping by myself, but it's important we recognize that we need to also be careful about the impact on the overall economy that an extra burden on the European banking sector, but also insurance, but also other sectors that are today data holder could bring. So these are some of the barriers I see, together with the concept I was bringing before of win-win situation, sharing value of that, and not having data providers and data beneficiary, let's say, that's unbalanced and will not work in the long term.
Dave, you kind of passed this process already, right? With the bureaus and the lenders and the aggregators. So what barriers did you manage to overcome? And like,
so it's interesting. There's definitely a common theme here, is that adoption is not as fast as we would like to see in the lender community. We unleashed our very first open banking score in the US that is referred to as Ultra FICO. And it's a combination of aggregated data and traditional credit bureau data. That's actually through Experian. And we launched it. We had huge interest in it, and the adoption was incredibly slow. And some of the things that we've seen is it, step one is build a fantastic score, but that's like the first step on a long journey. And we've realized that you really need to invest almost the same amount of effort in creating programs that can help lenders learn to adopt and learn to integrate the score into their operational systems. So some of the things that we have done recently is to create something we refer to as the Financial Inclusion Lab. And an aspect of that lab is actually to create a simulation. So we've worked with a consultant. We've created a very realistic scenario environment where the lender manages a card portfolio and a personal loan portfolio using open banking data and scores. And it's a very realistic simulation. You can make a lot of money. You can also lose a lot of money in doing this. But the notion is that you start learning some of the aspects of incorporating this new type of data into your operational workflows, including things like investing in marketing, investing in new loan design or new credit product design. These are all things that you really have to think about when you're afforded this greater insight into a consumer. And a big part of that also has to do with the managing of the actual consumer expectations. Because what we've seen is that it's no longer a passive consumer moment where consumer just allows you to pull their credit bureau. They have to actually engage. And it's very similar if you're working, if you're a bureau, it's kind of managing that data furnisher relationship. It's a give to get type of mentality. And so you have to communicate that to the consumer. And traditional banks, when we launched our open banking score, they were not ready, I think, to navigate that. Fintechs do that all day long. They're very good at it. But we saw that traditional banks really had to be coaxed and learn that process. So that is something we've had to invest a lot in, I think.
Okay, so we all see that we're kind of transforming the market with open banking as it moves on, as it develops. So Thibaut, maybe you're working on multiple markets, as you said, like they're all different: Northern Europe, Southern Europe, Mexico, Latin America. What are your observations about how the market changes when the open banking comes there?
If you consider that a loan is a coin with two faces. You have to monitor the behavior of a person, fraud, is it a lazy payer or not, and affordability. Given that, you want to, you have these two variables which make your gray area more or less larger. So you want to make sure you don't lend money, too much money to a person, and you don't lend, you don't leave money on the table because it's profitability loss. If you reject a loan request when maybe you don't agree with the amount requested, but maybe 80% of that, half of that could also be a source of income. So combining those two variables wisely, as Dave is saying, technically is really changing the game, because you can be more profitable with less risk. The account information on onboarding prevent a lot of frauds. It gives you a dynamic, real vision of the balance of the accounts, the type of spendings, the type of incomes. And the other side, you have like in credit bureau historically stored all the behavior of a given person. Combined together, you can get very fine in terms of scoring accuracy, and you can reduce the risk without losing business. So I think this will be, when it's well implemented, it will be very a game changer on the market.
Mm-hmm. Davide,
Yeah.
do you see it this way?
For me, yeah, I think that there are two big sides of what can happen with a real open banking, or what I call it data sharing economy in a wider sense. I think that surely there is more financial inclusion, there is more opportunity for tailored propositions, etc. So all of that is somehow the positive. But I think what was the other aspect, that if it doesn't happen, it will not fly. And that's what Luciano started with, is the trust. And for me is the awareness of the value of data. So if the customer starts realizing that data as a value is an asset, as a value associated to it, and finds a custodian for it, and finds a broker that can really market that asset for a return, and is able to act in terms of data sharing, data monetization, data value opportunities for that asset. But at the same time, if you are risk adverse, you can be custodian of that asset and be protected, because the aspects of privacy and protection are very important for every asset. It's a bit like at the start of banking sector centuries ago. Banks did not exist. Everybody was protecting his assets in his own way. At some point, banks started, and we are not today. Anybody is keeping money under the hood. So I think it's a matter of how the economy changes, and I think it doesn't change this perception of the value of data, the data as an asset. I think this will not fly. So I hope that the regulations that are happening, Data Act, etc., helps to make this mature, and putting the customer at the center of driving the data economy is the final objective of the commissioner in the open banking. So that's all positive. I think all the stakeholders agree on that, and we just need to find the right balance. I think this is what will be the real game changer. Today, I think, is an asset for some companies able to exploit it. All of us are exploiting data. It's part of our businesses. I think that to make a real value, if becomes a currency of exchange with an associated value, I think that will make the multiplying effect that the real digital economy will see, and the customer can also benefit. So it's that win-win factor I was describing.
Mm. Yeah, that's
maybe
true.
complex vision, but is where, as strategy about data, I think we all need to target with maybe little steps, and this regulation in the PSD2 has been one step. Then there will be many other to reach that level, but I think we can already see data economy developing in this way.
Okay, it's not only open banking that is developing. So we have cryptocurrencies developing, we have all the new super apps developing, we see lots of new shiny things like cross-border services. Everything is kind of blooming and growing at the moment. So the question is, like, I don't know, to you, Luciano, maybe, as a credit bureau, you definitely play a big role here in all these, ways of development. What's your focus? What's your direction? I don't know if it's with identities or do you get them all in?
So first, maybe more of a philosophical reflection on this. And it is, of all these buzzwords that are floating around, you know that some will come to fruition and some we won't talk about in 3 or 5 years, right? Now, in the meantime, until we understand what is real and what didn't come to fruition, probably the credit rating agencies and credit bureaus are the structural backbone in the system, because to Davide's point, consumers and banks need to make sure that the data is in a place they can trust and that the mechanisms through which they are being assessed are credible and have been there for enough time to have been proven. So what I would say is maybe it's more of a macro statement, and then I'll go briefly through the ones that I think are closer home in terms of where the bureaus will be able to help. The macro statement is during this transition and this big paradigm shift that might be underway with all these trends you were mentioning, Elena, the credit bureaus are going to be the stability backbone to the system while this change happens and brings reassurance to the consumer and to the financial institutions. Now, more grounded in terms of the trends that you were mentioning. I think that in particular, the open banking, open finance, and hopefully one day open data will be very valid for identity verification from all the trends you were mentioning. Identity and fraud detection is very likely to remain closer to the business as we know it today. It's a different ecosystem. So I would say two things. One is we should be the bearers of this, the stability banner, because it's very stable data very well structured. It has been so for many decades. So it is the safest data we have and the most stable until the change happens. And the second one is from those trends that you named, specifically identity verification is the one that we should play the strongest in the near future.
Okay, thank you.
Can I just add to that?
Yes.
Yeah. No. I just wanted to add to your statement because completely agree. When I first started learning about open banking data, I thought, oh, well, there's the end of credit bureaus because, oh, it's just, we'll get it. But that's not the case at all. And one of the just easy reasons is that you cannot get negative data easily through open banking. As a consumer, I can't give permission for you to see a closed account, right? So there's no negative data. I mean, open banking data is great for getting positive information. Where I'm working in an environment where it may only have partial positive or negative only data, open banking data is incredibly important. But even in a world where there's full reporting, we've done analysis. We've done our best job at building an open banking only score, not looking at credit bureau data, and then compare that to just a pure credit bureau data score. You can't beat it. It's impossible.
And sorry, we'll do two.
Yeah.
You might, and why the reason why I said some of these trends in 3 years' time we won't remember about them is you might remember a few years back there was a big anxiety around social media data, and we thought, oh, social media data is the future, right? It'll replace it all. Well, it didn't for a number of reasons. First of all, it's declaratory, so you cannot take everything you see there for granted. But we thought, well, the relationships are important. Yeah, good luck with it, because creating the identifiers is something of a magic trick at the moment. But the point is, beyond the particular issues with that trend, to what David was mentioning, we are not still in a place where you can say you can replace the credit bureau information with anything at the time being. And our risk forecast, this goes not by experience, my personal view. I don't think in the next 5 to 7 years that is going to change. Beyond year 7, something might happen. But for the foreseeable future, I see the open banking data super important, in particular in environments like the ones David was mentioning. Now, it doesn't have the penetration and the coverage and the stability and the protection that would allow that type of information to replace the traditional sources, at least yet, let's say for the next 5 to 7 years, at least, I would think.
I would agree. That said, open banking data is extremely important for certain segments, and it gives some definite gains.
Totally.
Particularly for thin, young credit files, for no hits, people that may have had financial distress in the past, that open banking data will give you a much more recent view of what's happening for that consumer. There's lots of opportunity.
Yeah.
I think,
and in the prime sector as well. If you want agility in the prime sector, there's nothing that compares to open data, because you're able to provide a level of services that otherwise you cannot. If you want to make it agile and you want to be top of mind, first choice for that client, well, yeah, open data is the answer. So I would say the middle layer is where most of the struggles are going to happen still by now.
Okay, a quick fire. What do you expect in the next, you started saying that it would be the same, Luciano, but let's give everyone, what you're expecting the most of this PSD2, PSD3 in the next 3 to 5 years?
For me, definitely generative AI. For sure, it will have like some great impact and earlier than we expect. And also something very low profile for now, but it will be long term, I think, appearing. Smart payment, combining account aggregation with pay by bank feature to get data at the payment time. So like that, the merchant also can profile his customer when he's giving, he's executing a payment through a pay by bank feature. So yeah, something I see coming in the 3, 4, 5 years.
Davide?
I think innovative value data-driven services will be a standard, and customer will expect that they can benefit from some of them. We see already things like this apply, for example, in compliance, in customer identification, etc. So services where you can apply a lot of data sharing, even on between competitors, because these are topics that are not competitive sensitive. So you can open and collaborate, potentially using synthetic data to trial and train your algorithm, and then each of the player of a consortium can play with this algorithm on their verification. But at least you have created a standard, and you know that compliance is a standard in that market across different players. So these are services where you can even share them cost and share the risk as well. So it's this is just one example of how a data sharing economy could drive. Long term, I think the customer needs to be in control of their data. That will be the game changer. And in theory, is the owner of the data. So in a way or the other, he will realize, the customer will realize that that's an asset. And I think is the direction where all regulations, in my opinion, are going.
Luciano?
I already started that, so I'll kind of wrap it up. What I would say is two main avenues. One is we'll hopefully mature in the use cases. So there will be, like they were saying, very well-defined segments and use cases where you say, well, open banking is the answer. So that maturity will definitely come in the next few years. The other big avenue is, if you think about the journey the consumer goes through today without realizing it, is still complex. It is complex to understand and is not the most streamlined in the world. So I would say that consent journey and that digital journey will probably start to mature and come to a place that it'll be a lot easier to have a higher penetration.
Steve?
Yeah, I just echo some themes here. I think it's really getting the consumer to be aware that of transparency in terms of their data, but also the opportunity to share data. If they're being declined a loan, to have an educated consumer that knows that, hey, I'll share this with you. I'll share this piece of history that may not be in my file. And so there's a whole education piece that has to go with that, and that user experience has to evolve. And I think we're getting there. I think we're on the path, which is exciting.
Okay, we have a lot of questions on the app, actually, and somehow people can even vote for these questions. I see it for the first, so they kind of rate it already. So I'll probably start with these questions because they've been kind of asked somewhere in the middle of our speaking from their priority. Then we'll take a look at the results of the poll, and then everyone who wants to ask a personal hand-raising question, we can do it on the drinks in the evening, tomorrow morning, whichever. So the most popular question is, what do you expect from PSD3? what should be, and I don't know who has the insight.
I think Davide will be delighted to answer.
Yes.
I said already some of the things that are in the lesson learned of PST2 that I think we hope will get, that are of course more compensation driven, win-win, less prescriptive and more contract multilateral agreements based on objective and a framework of rules. So those are the things that could open up and then create that collaboration that Thibaut was hinting to. But today everybody wants to do his own homework and that's it.
If I could add, I think it should give a few first steps in the direction of open finance and open data. That's what I would expect. That at least we start to see what it is about, that the regulators are thinking in this regard.
And basically open data, open finance are very close because it's alternative data to open banking. So yeah, we wish the regulator open new segment of data wider than open banking. And maybe also like periods, different periods, given the context. Because for now, open banking have been widely also adopted for fast loan, buy now, pay later, and so on, because it's short-term loan. Because the recurrency of the reading is 3 months from now. It's getting soon in 180 days. But given the context, with a win-win situation with a customer, if we're giving back a service based on that, we should let the user to decide how long he wants to share his data, because he is in power. So I think it should go this way.
Yeah, on this one, I think in terms of open banking, what I think the Commission is also considering is potentially something that is more centrally able to make consent management overall, and hopefully even cross industry, where actually the customer could be more in control of accepting, revoking, and monitoring who has given access to that. Today is just a jungle. It's impossible for anybody, even the more careful customer cannot know what is shared with whom.
No, for now it's a Boolean. It's 3 months.
Yeah, no, I'm talking not just PST2, I'm saying in general. Yeah, of course, in PST2 is a bit more regular, but as you accept also because somehow you know that is expiring. So yeah.
And I think that addresses one of the big challenges, I think, in using this type of data is that abandonment, right?
Yeah.
Is that you see a pretty high abandonment rate, to be honest, right? And it varies a little bit. If as a consumer, if you're being handheld through a loan application process, abandonment rate isn't that bad. But you go into an automated process, and it just, we're in certain instances we're lucky to get 35%. But complete rate.
But I should say the abandon could also be because you don't see any value tangible or monetary in a way. So somehow, yeah, I carefully check that my basic providers are not stopping the service to me, and I would not allow that to happen. And of course, in that case, I have a value associated to it, my energy or whatever. And if I do not see any value, then it becomes a problem.
Yeah, okay. In terms of drop-off, yeah, basically the customer should be aware exactly why you're gonna share his data, what he will get out of it, and how his data will be stored. And if the 3 pillars are not fully explained before raising the widget to request for logging, password, and consent, the drop-off is huge. And it's very half of the success of a project implementing open banking is best practice on how communicate the way the data are going to be used with the customer. And we worked also a lot with fintechs, sometimes get more into UX. And that's why maybe they got some good results on the same service. And we see that companies which are a more complicated stack to modify in terms of technology, because it's very historic to update and it's complicated. there is this heavy backpack to move forward. And that is, it's more complicated to implement, but it's important to provide the best user experience explanation to avoid the drop-off. And it's 50% of a success rate of a project.
Okay, I have two more questions, and people continue voting for the questions, by the way, so I need to take them. I see interest to them. One probably requires just a yes, no, and some names. Can you name 2 or 3 market players that managed to build successful business models under PSD2 on European level? 2 or 3 market players that managed to build successful business models under PSD2 on European level.
Marketplace like competitors?
Market players.
Like a marketplace.
Players.
Sorry.
Anyone? Yes, no, no.
For me, yeah, no, but the fast loan is definitely the segment of market which was like intense into this this part. Then PropTech is getting there because there is a lot of volumes also, and it's exactly the same paperwork they are requesting at the entrance. So yeah, for me, and onboarding and fraud prevention, because when you want to triangulate the customer, you need the titular of a bank account, you need his IBAN, and you maybe need to bind his card number. So, and to avoid fraud, many business now implement this to be safe in terms of onboarding.
Yeah, this domain maybe. And the last one is very kind of, it's open for discussion. So maybe there will be, everyone would want to say something. What's the future of credit bureaus if artificial intelligence and open banking is developing further? What is the future advantage of credit bureaus?
I think I answered that one before. For the next decade, it might be a concern. I don't see it.
It's still voted.
Yeah, I got to go with that. I think you and I both spoke about that. I don't think credit bureaus are going anywhere. There's a huge value in the services that they provide, and
I think the aspect will still be trust. I think that will not will be the value to preserve will be the aspect of trust, the aspect of being considered and as the reference for a market or for something that you know as good data governance, a good rules, a good compliance, and needs to be enhanced with all the techniques and the data available in the open data economy. But that aspect of trust is the one that will protect that business and that service in the long term, because you still want not one of the many sources for a very critical business. You want the trusted source.
So how are we doing on time to unpack this one?
We have just 3 minutes left if you want to be really, really sharp on time.
Okay, I'll be super quick to unpack that one a bit. So let's dissect it in terms of the modeling and the Gen AI conversation we were having. What could happen? We can automate the model development. Well, to some extent, you can argue that that's already there because ML automation is already there. So you can make it better to Gen AI. Valid. Yeah, it's faster. It's more accurate, more predictive, but it's still on the same train that auto ML is happening today. Now, one thing is saying the credit bureau will evolve in a way where open banking, open finance, open data will weight more than it does today, and it'll be a significant component of the data assets. And a different thing is saying that this will become the Far West, where everyone will manage data in a decentralized fashion with no central repository of that information. That I personally think is unlikely to happen. So one thing is saying the relative weight of the structured data in data marts or data warehouses or data lakes, as far used to know and have known for many decades, that is going to continue there, but it will lose importance relative to the alternative or newer data sources like open data or open banking. That's one thing. And that I think will happen over time, like I said, in the next 5 to 7 years will happen. Now, completely decentralizing that governance is where I think no consumer, no banking institution or finance institution will be comfortable with. But this is a personal view, of course.
Okay.
If I could add maybe just 15 seconds, because I know
Yeah,
we're long.
sure.
One of the interesting areas where I think generative AI really could come into play with what we've been talking about really is around that user experience, that user interface. And the credit bureaus are in a great position to help implement that and shepherd that. Banks, unless you're a fintech or can spend a lot of time in developing that out, it's difficult, I think, from what we've seen, especially for smaller banks, to take that on. But to create that exchange takes a different set of skills, a different set of really a different mindset, and I think credit bureaus are in a great position to help shepherd that in. And that's something that's going to be required, I think, for open banking really to take off.
Okay, brilliant. Roman, can we take a look at the results of the poll? And I don't know if that would be on the screen or I should read it out loud. So the first question, how likely are you, it's here, sorry. How likely are you to explore using open banking data in your business? The first answer got the most answers, already using or testing. Oh, here it is. Oh, wonderful. And then somewhat likely, very likely, not likely. So we see that, we all think about it. Next one, please. What do you consider as the primary use case for open banking? Choose top 3 from the list. So the first one is affordability and creditworthiness, then enhance existing credit risk assessments, income verification, it's like second, third, and cross-border lending, and the rest is just, less relevant. And the third one, what should be the accuracy of categorization? What level is considered as enough to use? When preparing this session, we had a long discussion about this enough to use at the level.
It means that the adoption rate is going to take longer than we thought.
Yes. So, we can see that it should be very accurate. So even we're in the industry and we know that the models are not 100% precise. This one should be really more than 90.
Especially for affordability check.
Especially yes, and it matters for everyone because doesn't matter, it's just 0.
Well, but probably for affordability check, it's already above 90.
What?
For affordability checks, it should be above 90, so that should be fine.
It should be very close to 100%, because every line you miscategorize, and then your tree categorization is depending on how it's made, because each company has a different one and different the context and the use case you want to use it. But for affordability, getting wrong one line on 300 statements could really be a very problematic thing. You look like a pay by bank between friends considers as an income in the affordability check, wrecked it down. So it's very important, need to be close to 90, very close, 7, 8, 9.
Okay. Thank you very much. Thank you very much for your attention. Thank you very much for your time, for being so transparent, giving us lots of insights and everything.